Hi, welcome into today's SBA EIDL Loan Increase update, as well as the SBA EIDL Funds Exhausted video. My name is Michael from Viral Funding Solutions, and I am going to get right into it. What you are seeing on your screen, I have mentioned in the past in a previous video, and I will go over it once more on the EIDL loan denied reasons and 5+ SBA EIDL loan reconsideration declined reasons, plus free templates and funding amount remaining for you to hurry in. All of this will be down below in the description for you to check out. Before you go there, though, make sure you pay close attention and you watch to the very end, because I'm also going to be sharing with you an alternative as part of this series that I am releasing, where I've already made previous videos on what is an EIDL loan alternative, without collateral, with collateral, and so forth. I'll leave videos to that content down below, such as the SBA 7A, 504, microloans, and other programs that I will continuously be repeating and coming out with more in the future as well. So if you're wondering what's happening right now in today's state of the EIDL loan process, about 50% over, less than 90% of individuals, business owners are looking to get funded through the EIDL is what is being predicted, and about 9,000 to 10,000 or so in that range will not be. So for those of you who were able to submit all your information, the documents requested for an increase, reconsideration, loan modification, appeals, declines, all of this, and you got it in before May 6th, because that was the deadline. And I released a video on this not too long ago, as well as the portal being shut down on May 16th, then make sure you pay close attention. And I'll leave more content to that down below in the description. But for those of you who did already get it in and are in the queue, there's been a lot of conversation about this, and you could be getting funded. Those of you who will not are for some of the reasons I'll be mentioning really quickly in this document that you see before you. But the two primary ones would be, one, credit is an issue, and I'll be going over that in a little bit, as well as the tax returns, tax information, discrepancies, and so forth. And there are a lot more. So let me go through this document really quickly, and then I will transition into what is an alternative option through what is called accounts receivables, where you can use unpaid invoices, give them off to a factoring company, and then you get a percentage of what you give away, and I'll go into how that works. But that is what this series will entail on the collateral-based alternative to the EIDL. But again, like I said, there are other ones that I'll mention in this video as well. So number one, the reason you are operating in an eligible business. For you to qualify for the EIDL loan, your business must have 500 or fewer employees, illegal activities to avoid, as you can see on screen. And then, like I said, I'm going to be going through these, not rushing, but I want to get through this. And I have another video where I specifically came out with all the content on this and more that I'll link to down below. Number two, you have low unsatisfactory credit score. So you can see it's already up there just below the part of operating in an eligible business, which is the standard of all. And the SBA has certain credit score requirements, but are not published to the public as frequently, or it may be out there, but it's just harder to find, or you just can't get this. So I always communicate with loan officers. I have underwriters, I have lenders, and a team of people who are always, one, keeping me up to date, but I'm always intertwined, and we're always building this business and personal connection with one another. And so with myself as a business loan broker / agent who can help you get through the EIDL loan process, I don't specifically originate or process the loans. I'm not the loan officer of the EIDL loans, but I am the individual who understands, because I have all this background and all this inside knowledge that you can't just get from quick searches and finding them online and so forth. So I've helped out a lot of businesses from all types of industries. If this is the first time you are watching me, and I've been in your shoes before, and I know how hard it is to get business funding, government-backed funding, as well as private loans. And what are the interests? What are the terms? Should I be accruing interest over the time? Because that is what's happening with your EIDL loan if you have one. And the date of getting that increase and how much you can get it deferred for just 30 months and so forth, and what it was before then. And just understand that the interest is still occurring at that 3.75% over those 30 years. And even if it's less than 3.75%, but for nonprofits, et cetera. But still, you have to understand that you're paying towards the interest, and that adds up very quickly. I'm sure if you've been in it for some time now, you would see that and you'd say, yeah, it does add up. So it's 570 plus for, this is a credit score for loans under 500,000 or less. And for larger loans, like more than 500K, of course, here it's 625. So you have unverifiable information. But before I go into that, I have a lot of people who do reach out to me and they'll say, hey, I need help with this. This is my situation. And why didn't I get approved? And I tried submitting my reconsideration and they've been holding me for 18, it's been 18 months. And, there's a lot of people who have been in the queue and people who haven't been given a response. You've tried to reach out, Congress, etc. A lot of stuff happening like with different bills with the House and the Senate, House passing through the Restaurant Revitalization Fund, the COVID relief bill. But that doesn't look like it'll be happening or anytime in the immediate future, not passing through the Senate and so forth, those readjustments. But there are alternatives. So please stick with me. So it's hard to go through this and not understand, oh, well, this is what I needed and I understand why I didn't qualify. And it could be a combination of the two, or credit and then the tax. It's not what you need. You're not supplying the right information. Everything isn't on there that should be. It doesn't look the way you should have it. You're offering up a different year, thinking that you can get approved because you submitted a different year's worth of tax returns, etc. 3, you have unverifiable information, a huge one. I deal with this one a lot. You may have been denied simply because the SBA was unable to verify some of your information, such as your owner information, multiple owners, credit history, revenue, etc. Number 4, you aren't an eligible U.S. citizen. There is no exception here. You must be either a U.S. citizen or a non-citizen, national, or qualified alien to receive the EIDL for your business. There have been individuals where they have received the initial amount as not being an eligible U.S. citizen. I've seen some cases of that, and they wonder why, like when they supplied certain information to get their loan, why didn't they get it later on? And it's because they've been having changes and things have been changing over the course of it. So 5, you haven't experienced economic injury. Bottom line, if you haven't been impacted by COVID, whether it is severely or just primarily medium to severe impact, then it's going to be hard to justify this, especially if you're somebody who's coming from a growth and an expansion scaling back. You're trying to back it up by that, and you haven't been impacted. Perhaps there's some kind of cash flow discrepancies, but your business is up here and it's doing well. Its strength is up there. The credit, the revenue, average monthly revenue, the lowest monthly revenue within the last 3 to 6 months, 12 months of bank statements, years of tax returns, profit on it. You're doing well enough. And then there are other circumstances where it just doesn't justify for it. Number 6, character/characteristic reasons. If you have a felony on your record in the past 5 years, this will restrict you from getting the EIDL loan. Also, you won't be approved if you have ever been engaged in producing or distributing a product or service that has been determined to be obscene by a court, or if you are suspended or debarred from contracting with the federal government and or receiving federal grants. So if you've been denied for any of these reasons, you will highly likely be declined for an EIDL reconsideration at that point. Additional reasons, especially for over 500,000 and what you're asking for, it could be receiving lack of your repayability. That's a huge one. So when I look at all this with my underwriters, lenders, etc., lenders want to make sure they're getting their money back. Like, how can you repay this back? That is our ultimate question. Sure, we can look at the revenue and everything, but what are your projections as well? And where will you be in 3 months' time from now? And what would you be able to pay back, if anything? And we don't want you to have problems. Existing debt to income ratio, a huge one. And that's a lack of an SBA 7A loan. I released a video on this not too long ago that, and I'll leave down below the description, why people get declined for an EIDL loan alternative such as the SBA 7A is because they have excessive debt. Your debt to income ratio, your utilization, your inquiries is all up there, and you may have strong enough revenue and so forth, but the credit is a huge factor when we look at the credit reports and so forth. And then another part is the profit. You want to have at least 10%, if not 15 to 20% plus with all of that. Your living expenses, taxes, insurance reasons, other obligations, business tax information, as I said earlier. Cost of goods sold, no or insufficient collateral is another part. Now, let me dive away from that and get into an alternative option where you can offer what are these unpaid invoices that you receive from your customers, use that as collateral to receive funding. This is a very popular choice on the fact that you can get some of the lowest interest rates available anywhere. Not exactly 3.75% interest with the EIDL loans. However, you have complete control of how much and what you give up on those unpaid invoices to a factoring company, known all of this as accounts receivable financing. And let me get into this so you could turn receivables into cash without alerting your customers. Lower rates, larger amounts, longer terms, fill customer orders, cover gaps between payments. A 4.9 on Google, 5+ rating on Trustpilot, over thousands of reviews, and a little bit about what you need to qualify. But before I do any of that, let me jump into this document that I have opened here, and let me scroll to the top so I can go through a little bit of the intro so I can show you a little bit about what this is. And if you do have accounts receivables, not every industry will be open to having unpaid invoices. So there are other alternatives. I'll get into other assets-based lending, but stick with me. I want to focus on accounts receivable for this specific video, away from the SBA EIDL loan increase with what I just mentioned, which was how much of the approval rates, how many people have been declined because of certain reasons and ineligibility reasons and so forth. So accounts receivable financing, AR line of credit, and this will be down below in the description for you to get started so you can learn more, as well as this business loan form, this questionnaire. It's not an application, so you can complete it to get a personalized and customized email response for your best funding option and options. Plus, you will get a free 6-step pre-approval lending checklist to get you approved for funding much faster. So realistically, you can get this done in less than 30 seconds if you have everything. It's not a lot. It may look that way, but you can get through it very quickly. What will happen is once it's submitted, it'll land in my email inbox. And then I will analyze, evaluate your responses, and give you back an email response on everything you need to know. It is so in-depth. It is crazy. It is going to show you everything from an introduction all the way down to a conclusion. So in the middle of all that, qualifications, how it works, the numbers, bonus steps, bonus material, conclusion on what you should do, what I would do, how to approach all of this, everything broken down for you, and also personalized. Like, I care about you as a human, as an individual first. I want to know how you are doing. How are things going for you? How's your weekend? What do you have coming this weekend? How's your day been? As well as, hey, what do you need help with in business? What can we help you understand that, hey, it's not all about interest, it's about the repayment. If your benefit exceeds the repayment, then it makes sense to move forward. It's not always about, can I get 3.75% interest? What's the lowest amount? It's not a battle for the lowest interest. It's a battle for, does my benefit exceed it, the repayment? And if so, when you look at it on a monthly, weekly, bi-weekly, and daily basis, will you be able to justify being able to make that repayment? Sorry if you heard the phone, I didn't have it on silent. Someone's calling. But this is what it'll look like more or less at Viral Funding Solutions, who I've helped out, as I've helped out many people. I have many more services than what you see on screen there. I just put a limited amount, the key benefits, how it works, more or less of what I already went through. So something like this, it'll look like. You can check out down below in the description, and I will get in touch with you. Now, if you didn't know what accounts receivable financing, or what you can get is an accounts receivable line of credit, AR for short. If you didn't know, you can use your unpaid invoices as collateral and give them to a lender in exchange for the capital that you need. This may involve invoice factoring, which is the purchase of receivables for cash flow. So after selling your invoice or book of receivables, the factoring company is responsible for receiving the payment, taking this completely off your plate. By selling your invoice or invoices to the lender, you can get the capital you need to pursue your opportunities or manage your cash flow gaps. If anything, like let's say you don't get paid right away, there's weeks or months or however you get paid, those IOUs and so forth, but you need money to cover those gaps. This is a great way. It's also amazing for growth and expansion and so many other ways you can receive it for other types of financing solutions and services. So let's continue more over here. Because the invoice itself functions as collateral, you won't have to put up assets or real estate to get this funding. So that is the amazing part of accounts receivables, is no equity, no real estate, commercial, an investment property, excuse me, equipment, inventory, or other forms of collateral that is sufficient enough. And you have to be careful because you may not have sufficient enough collateral with your real estate property, enough equity in it. When it comes down to the appraisal and all of that, you're still short. But if you have IOUs, these accounts receivables, and you have enough of it, and I'll go into some of these details, it can give you more control. You can give up as much as you want. If you were thinking I wanted $1 million and you're like, I can give away enough to get $1 million, or I don't want to exactly get $1 million just yet. I want to start off here and then build myself up because I don't need everything all at once. So I'll give up a $500,000 to get 95% of up to aging receivables and so forth. So it's a great alternative and gives you more complete control. So what you need to qualify, 6+ months of business. A lot of the time it's 1+ years is required. 40,000 in monthly receivables and or 100,000 in open receivables on 30 to 60 day terms. Sometimes there's up to 90-day terms. A lot of the times you see 30 to 60. 1 million in annual sales is required. No minimum credit score at that point, because again, we're focused on a collateral based solution. And if you can offer enough of it, there's no need for credit score minimum. Benefits: sell one or several of your invoices. You can get funded immediately, so you can continue to build, grow, and expand your business without wasting any time, without waiting forever, months on an EIDL loan, without waiting all that for the SBA 7A or other these solutions. Instead, just imagine having the funds already in your account. You can go ahead and get and disperse, cover cash flow gaps, expansion and growth. You're doing all this all at the same time. You're building different parts of your business and sections, and it's been getting healthier and healthier day after day, month after month. And as time passes, you can finally free up more of your own time. You can feel less stress. You can go out and take that vacation and feel like, hey, I'm fine. And literally in that sense, without any extra thought into it. So manage cash flow gaps, as I just mentioned. You get a revolving line of credit. A lot of this, if you're not sure with lines of credits, you can withdraw and use funds however you would like, whenever you would like. And you only usually pay interest on what you take out. And that's more towards the lines of credits. And that's why it's a revolving line, because once you use all that and you pay the interest on what you only took out, it gets replenished back into the original amount. So facility size, 250,000 to no cap. So you can get as much usually. Line of credit amount fluctuates as AR fluctuates up and down. So rate starting at 4% or prime rate, let me say that first, which today, if we're looking at it from this point of view, a 4% was 3.5, may go down again, might go up again. So you might be seeing something different than what you see in this video over time, but I'll keep you up to date. So that plus the 2%, sometimes 2 to 6%. So sometimes it can get into a high single digit / teen rate. So 4 to plus 2, 6%, that's a bargain. Away from 3.75%, about 3 or so percent. That is a huge bargain. And this is where you're going to see the lowest interest out of all these other assets-based lending services, non-collateralized, because once you get away from this and you get away from, and you're going into like secured financing, secured term loans, secured lines of credits, it may be prime rates plus 2 to 8%. So you may be looking at it a little bit higher. Could be still less than 10%, a little bit higher though. So 4 to 7 days application to funding. So it is extremely fast. I wouldn't say it is the fastest out of all, but it's still very quick and we can get you in and out. More details, funding amount, 10,000 to 5 million or so. It can even be added on top of that. Flexible terms, 6 months to 10 years. We can potentially lend you up to 95% on your aging receivables. So 95% up to on your aging receivables. So if you were asking for a certain amount, million, we can lend up to about 95% of however much of those aging receivables you have. And we can look at the other ones as well and take those into effect. And the rest of that goes into like the fees for the lender fees, lender costs, and so forth. So you still get a huge amount of leverage doing this. So just documents that are needed to get started, the complete application, there's a digital one, there's as well as a PDF, but a digital one is the best way to go. It's very fast and streamlined. 6 months, recent bank statements, most recent business tax return, 2021 and year-to-date balance sheet and income statement, aging AR report. So as time goes by, we're in 2022, 2023, we might need the 2022 and year-to-date balance sheet and income statement, so that can consistently go that way. Aging AR report. So now let me come back into this. And again, everything will be down below in the description for you. And even if you don't qualify for accounts receivable financing through this collateral-based service, there are other alternatives. I'll get into them slightly, but you can see some of the things there. Sell or one or several invoices. You are in complete control. And you can see how you can get the lowest rates, longest terms, and highest amounts in the industry today. How you can use it for business growth, business expenses, bridge cash flow gaps between customer payments to cover your payroll, vendor bills, and any other expenses. Back to business growth, equipment or inventory. You can hire new staff, however much that is, or prepare for a seasonal change or changes. I know I've seen that a lot, and I've gotten business owners from all types and all walks and all backgrounds who come to me and they look through, and they might not specifically know about accounts receivables. You may have already heard about it, but now you're trying to look at it a little bit more. And you're saying, yeah, this is actually an attractive solution. And it really is. And it's such an attractive and lucrative way to go because it, again, aside from keeping your rates down, it does keep your repayments and so forth down, and all of that included in what you're expected going forward. So business expenses, business opportunities, expand or open a second location, take on more clients, or capitalize on bulk order discounts. What is accounts receivables, as we already went through, and 10 reasons why this is a great solution here at National Business Capital and so forth to help you get the best accounts receivable lender and so forth. And there's such a huge advantage of going through here as opposed to other solutions. So why choose them as the #1 fintech marketplace offering small business loans and services? You will get the best offer presented to you, and this is what I recommend. There are direct brokerages, lenders, and it's always best, I believe, to always be given multiple chances and from the best lenders out there that may be going, hey, I want the file. No, I want. And it's not like we're just dispersing it out there and it's going to affect your credit. That's not how this works. Okay, don't think that because we're sharing it to other people, it's not going to affect your credit score like that. So don't be worried about that. And so it's going to give you the best option as opposed to going to one direct place. You're going to get that one direct plus 2 other ones, and then boom, more. And I'm always in the background communicating all of this. And this is a great direction to go through and that I highly recommend. Just very quickly here, we already went through some of this for the AR line of credit, the benefits and the expectations there. And let me see if I can find a little bit more. There's an inventory line of credit we can also work for. You can see on the screen there, up to 85% financing and inventory liquidation value. And this one here is 7 to 14 days application funding, so a little bit more longer. $1 million in current inventory is what you should have. $1 million in annual sales, 1 year time in business, and there's no minimum FICO, as we saw some other ones. So collateralized programs, asset-based. So this is what I want to kind of transition into. But everything you need to know for accounts receivable financing down below, that's where I would get started. Unique benefits, loan size 100,000 to 10 million. Monthly payments are available, 70% max LTV, first, second, and third liens. Qualifications, real estate or heavy equipment collateral is required. No minimum FICO. Premier program requires 1 million in annual sales. So you can see a common factor with collateralized based option at 1 million in annual sales there, and so forth. There are a lot more options, but I won't dive deep into those in this video. I have other ones for that. But as you can see here, option 3, another one would be, let's just put it here because I took this and from a different document and I just pasted it here, that I use and I help other individuals with. So you might have seen something like this more or less. But secure line of credit backed by accounts receivable collateral is what we're looking at. Streamlined, transparent process, 2-day decisions, accelerated closing, up to 95% of the advance rates, similarly to what we saw earlier with the strictly accounts receivable. No industry restrictions, validity, and personal guarantees are offered. There is no set payment. You will pay upfront fees to set up the line of credit. This is a secured one, backed by collateral, usually accounts receivables. Then you pay the rate when the money is then collected, which is normally within 30 to 90 days. Qualifications, you must have 250,000 in aging account receivables or 1 million in inventory. No minimum FICO, no minimum time in business. Facility size 250,000 to 25 million, 12 to 24 month terms. Rates start at prime plus. So asset-based lending option. You can see a little bit about this. No time in business required. 50K in monthly revenue. Most lenders want to see that you're doing at least 100,000 in monthly recurring receivables or purchase orders. No minimum credit score is required. Assets or collateral. Typically, you can access 15 to 90% of your collateral, whether you utilize receivables, which are purchase orders, or another option. So that'll be down. All this will be down below in the description. I just want to make sure I covered everything here. Let me make sure that I did. Yes, we went through this there. So we covered that. Okay, we covered this document. We went over here. You can fill out that questionnaire to get started. And we went over this page right there. So just keep that on the back of your mind. You do have options. You're not limited. And just to recap, the EIDL loan process for increases for funds being exhausted is not 100% completely true. As you heard, there are about 50% over, just less than 90%, 50 to 90% or so who will be getting funded. And about 9,000 or so have been declined due to credit and tax reasons. And there's a lot of little specifics into that. Each person has different details of it. So you may have something different with credit issues and someone else, tax, etc. There are more ineligible reasons, as you got to see in one of those documents. And what are the expectations moving forward with stuff like the restaurant revitalization funds, the relief bill is not being passed, not being pushed through the Senate, and all this stuff happening. Who knows what will happen in the future? And transfers from other spots to the EIDL is not always the case, because they have more funds there to disperse. You got to see the accounts receivables collateral-based option and how you can get funded based off of that, and why it's such a awesome solution, and how you can get some of the lowest rates, prime rate +2 or +2 to 6% or so, depending on your industry, depending on your risk, the strength of your business. Of course, it just isn't 4% for each and every single business owner. It has to be adjusted to each and every industry and the specific details, projections, and where you're at with revenue and so forth. When we look at all this stuff, bank statements and everything, the cleaner it is, the lower you'll get. But it's going to give you a lot more control, as opposed to other collateralized options or non-collateralized to cash advances, unsecured term loans, and so forth. So keep that on the back of your mind on how you can use this. There are other options out there like cash advances, short-term loans, medium, long-term loans, unsecured. You don't have to offer up collateral, bad credits, but just know that you could be a higher risk, and the interest rates can be somewhere between 20 to 50%, 20 to 200% plus. So even if it's a higher interest, what you have to look at the end of the day is, does my benefit exceed the repayment? And you need to think about, what if I get 40,000 or 50,000 and I'm paying back 3,000 or so a month, maybe a little bit higher than I would have wanted, but that 40,000, you're going to turn it into 80,000. You're going to double your money. You're going to be doing it consistently, season after season, or it may be just a short one, but you need it because this is a hard one. And then this is the season that you're going to increase your return on your investment in the short and even in the long term. So think about it that way instead of just the interest, because if you're just stuck on, well, I got 40% interest, I got 30% interest on this cash advance, not on the AR line of credit here. Well, it could be that you already have cash flow problems, insufficient cash flow, your average daily deposits, average daily bank balance, the number of deposits, the strength of your overall business isn't there. You're using the funds for COVID relief or other reasons that for payroll, and so it's not going to be giving you a growth or expansion. But if you're in a better position, like I say, with better fundability details, that being credit, revenue, time in business, industry specific, the bank statements, if it's tax returns we need, year-to-date financials, profit and loss balance sheet, and so forth, if all of that looks clean, it looks strong, then you're in a position to be given better rates, better terms, and these term loan options that people want, 1 to 2 years, 2 to 10 years. But we have to be realistic about, can you even qualify? Do you even have high enough of a credit score, enough time in business, revenue is where it needs to be, and so forth. And there's not fluctuations in deposits and how they're being transferred. It has to look like organic deposits. I'm going to cover a little bit here, and I'll get out of your way. I know I've put a lot, but yeah, that's what you have to look at. Yeah, I have a little doc, put it on my doc right here just to make sure, my little notes. But I did cover everything that I needed to. If you have any questions, comments, or concerns, please feel free to voice them for me down below in the comment section. And like always, if you enjoyed this video, please give it a thumbs up. If you would like to, please share it with others who you think will benefit from this, not only with EIDL, but understanding what their alternatives are. It can be a complete stranger, a friend, or a family member. And if you have not subscribed, please go ahead and do so and click that bell notification icon so you do not miss any future videos I will be coming out with. That is everything for now. Talk to you soon.